It seems to me it's a good Q3, especially when you look at the equity trade and banking global markets. What's been the highlight for you?
So basically, I think that SocGen, we posted a pretty solid, robust Q3. So we have a bottom line, an increase of revenues of 9%, which is, I think, a pretty good performance, supported by resilient activity in France, but also confirmation of the trends we see in emerging markets. Also rebound in market activities, up by 7%. We continue to invest in the transformation, in the consolidation of the setup. We've also reduced the cost of risk, which is still very low at 22 basis points. And we ended up with a contribution this quarter of 1.2 billion euro. And that is very important in terms of profitability. We have, on a 9-month basis, a return on tangible equity of 11%. So it is, I would say, a very good quarter.
Great. And I see here, which to me I find pretty striking, you're saying revenues from equities were up 19%. You cite it's due mainly to a very good performance in the United States. Now, looking forward, do you think, as SocGen, you're well-placed placed to see this return in volatility we're seeing in markets? How do you picture that?
So, very good question. So I think the benefit to have a global platform is the fact that you can seize opportunities globally. What we have seen this quarter is very robust activity in equity in the US. In FIC, it was more in Asia. And globally speaking, the activity was still subdued in Europe. So in fact, we managed through this very solid, let's say, footprints, let's say, to capture those positive vibes in the markets. That's why we have seen this rebound.
Great, and I have to ask you about Italy because clearly it's a story that's weighing on everyone's mind. I know exposure is relatively small, but there's always a concern of what it means to your portfolio. For SocGen, across BTP is hovering around 300 basis points. What does that mean?
So for SocGen, our exposure to Italy is very limited. It represents only 2% of our commitments. So we have mainly CIB activity. We have a business in consumer finance. This is so very limited part of our business. But having said that, we feel confident regarding Italy. I mean, Italy is an important partner of France, of Germany. So I'm confident that down the road we will manage to go through this crisis.
To find a solution, you don't see political jitters again in Europe being a risk for your bank, but more broadly for the industry?
I think that we, more broadly, we still see some factors of risk in Europe. One is Brexit, of course. One is the surge of populist pressure here and there, the fact that we have European election down the road in June. Clearly, we need to have more clarity regarding the European project. And it will be an element that will support the re-rating of the financial sector, I think, in Europe. But I think, globally speaking, the context is still very supportive. Bottom line, we see Eurozone today with normalization of inflation. We still have a GDP growth around 2%. So I think that the outlook is still very good.